we've got an interesting setup here. First off, let's just look at this from a macro perspective. This is what it looks like for a bull market. This is what our bull market looks like. It's getting stronger. The buying's getting stronger, and there's no bear market in sight. It's just only getting bigger.
All right, welcome back everybody to Altcoin Daily, where you subscribe because you're interested in making money with cryptocurrency, and this channel keeps you informed. My name's Austin. That was, of course, on-chain Bitcoin analyst Willy Woo going over the latest on-chain metrics as of yesterday to help us gain a better understanding of where Bitcoin may be moving next. I will link the full episode down below in the video description, but in today's video, I want to play you one more clip from that episode, as well as go over the realistic price path for Bitcoin in August, as well as the latest news involving Synthetix, involving Vechain, as well as lower cap altcoin news that you should know. So, like always, check the timestamps down below in the video description, and let's jump in. Here is a realistic price path for Bitcoin this cycle, according to on-chain analyst Willy Woo. According to the analyst, Bitcoin's on-chain fundamentals currently give BTC a fair value somewhere between $50,000 and a $60,000 Bitcoin, meaning based on the on-chain activity, Bitcoin is currently undervalued. In a direct quote from what the data is showing us, Bitcoin deserves to be in the $50,000 to $60,000 range right now based on the on-chain activity. And once we break $42,000, that's the long-term sort of line in the sand of the channel we've been playing at. And that's just really a big gap from there to then $50,000. Meaning if we can break a $42,000 Bitcoin in the short term, in August, if we break 42, there's not going to be much time to then get to $50,000. Interesting. Give me your initial thoughts down below. Again, if you want the full breakdown, the full analysis, the link to the full podcast is down below. But what this means to you as a Bitcoin holder is, although Woo is bullish on Bitcoin, the on-chain analyst doesn't see Bitcoin shooting through all-time highs, through $65,000 very quickly, if and once $42,000 is breached. According to Woo, the flagship crypto is more likely to bounce around for a while in the $50,000 to $60,000 price range before it's able to make new all-time highs. So some very realistic analysis for the month of August. But then the next obvious question would be, Willy, if the on-chain fundamentals are looking so bullish, who's selling? Who would be the people selling? Watch this 20-second clip.
What's interesting is nobody is selling right now. There's no sell pressure coming from these on-chain wallets. So the only people that can be selling are traders on exchanges who have their coins there, which this doesn't capture. All the coins are moving off the exchanges, which we can see on the exchange flows.
Okay, so short-term, the markets are usually dictated by traders, and long-term, the markets are usually dictated by fundamentals. We know this. But can on-chain metrics ever be wrong? It's saying we're undervalued. Can on-chain metrics be wrong? Are on-chain metrics wrong when price action moves in the other way? Well, on-chain tracks fundamentals from investors. Short-term price tracks trading games from speculators, from traders. And I love this. I love the realistic point of view. And Willy says, if price ever moves in sort of the opposite direction of what on-chain metrics are saying, it's due to three outcomes. Number one, traders, speculators are mispricing the asset. Traders can be wrong, traders can suppress or manipulate price. Number two, traders, speculators can scare investors into following them. And both of these can be put under the category of manipulation, right? Traders manipulate. And the number three reason that the on-chain metrics could end up being wrong is if the analyst is drawing the wrong conclusion from the data. This will become more common as on-chain data becomes more widespread and complex. Okay, that does make sense. You do have to ask yourself, do you trust the analyst? That's your call. Give me your thoughts down below in the comment section. I'm going to keep searching. I'm going to have my eye out for more clips, more on-chain data so I can bring you. As I get more info, I will keep you updated. Let's keep moving and get to our first piece of altcoin news, starting with Synthetix. Synthetix goes live on optimistic Ethereum Layer 2, a scaling solution. The release, which supports trading of Synthetix USD, SBTC, SETH, and SLink, is part of a continual phased rollout of the Synthetix protocol on optimistic ETH. So here are the details. In a blog post published on the 30th of July, Synthetix announced that all synth exchanges have gone live on optimistic Ethereum Layer 2. During the initial testing phase, exchanges will be enabled for the coins mentioned above, with more cryptocurrencies to be added as the phase progresses. And of what benefit is this testing phase to Synthetix? Well, the testing phase will be used to better evaluate network performance, observe the behavior of users on L2, and gain other valuable insights as additional functionality is rolled out on L2. So expect this, but what this means to you if you hold Synthetix is one of the biggest improvements Optimism will bring to Synthetix is a significant reduction in oracle latency. Because right now, the Synthetix protocol fills trades at prices reported by Chainlink's decentralized price oracle network. And Chainlink is obviously on Ethereum. However, high fees on Ethereum can often make frequent oracle updates economically impractical, creating opportunities for front-running. On L2, price deviations between oracle updates can now be on the same order as an exchange fee, effectively eliminating the potential profit from front-running. So give me your thoughts on this down below. As a Synthetix holder, though, you should love this. Next piece of big news for Vechain. Vechain releases new milestone for Proof of Authority 2.0, successful VIP, Vechain Improvement Proposal 193 testnet. So this is a major upgrade for Vechain, and we know that Proof of Authority, it's way more centralized, but it is way more scalable as well, and they are moving to Proof of Authority 2.0. In pursuit of our vision to enable global, scalable mass adoption of public blockchain technology, the Vechain research and development team has built Surface, in other words, Proof of Authority 2.0, called Surface, standing for a secure, use case adaptive, relatively fork-free approach of chain extension. So this is the next step on the roadmap, and what this will do for Vechain. This novel consensus mechanism was built to eliminate the weakness and gain the benefit of the two main consensus types, Nakamoto consensus and Byzantine fault tolerance BFT. With this new mechanism, the Vechain Thor blockchain can maximize its high throughput capabilities while also ensuring data finality. What this means in practice is that the high volume use cases can now exist on chain with the highest rate of data security unfounded in any other blockchain platform. Interesting. So Vechain holders should really like this. They say they're becoming more scalable while still being able to maintain their security. And with this major update to our technical model, Vechain Thor becomes the ideal open-sourced platform for enterprises, governments, or anybody looking to build their applications on a secure, low-cost, immutable, and full-featured public blockchain. We will have to see then which enterprises and which government agencies choose to then use Vechain. Sound off down below if you have an opinion on this, but let's keep moving. Next up, let's talk about lower cap altcoin Voyager. Voyager Digital acquires crypto payments company Coinify, and in a direct quote, as the adoption of cryptocurrency payments gains momentum, the acquisition of Coinify brings a global payments infrastructure to Voyager's digital asset ecosystem. So this is a big acquisition, this is a big piece of news, and here are the details. Crypto asset trading firm Voyager Digital has arranged to purchase payments company Coinify in a deal worth $85 million in cash and stock. So this is what Voyager gave Coinify. In a Monday announcement, Voyager said it would issue 5.1 million shares of its stock, worth roughly around $70 million, as well as provide $15 million in cash to Coinify investors. The company also said it would retain $5.5 million in cash from Coinify's balance sheet. And why does Voyager want this? Of what benefit is this now to Voyager token holders? The acquisition of Coinify is aimed at helping Voyager expand its capabilities, potentially giving crypto users around the world more options for cross-border payments. Voyager has been publicly listed in Canada since 2019, while Coinify said it was currently available in Europe, Asia, North America, and South America. So with this acquisition, Coinify is bringing a global payments infrastructure to Voyager's digital asset ecosystem. If you hold Voyager, let me know. I'd love to get sort of a straw poll down below in the comment section. But either way, this is pretty big news. That is today's video. Be sure to watch a recent interview just dropped on building generational wealth with Bitcoin. Basically how to retire with Bitcoin tax-free. Check out this interview. And like always, see you tomorrow.